Good afternoon, traders. It is Friday, October 8th, 2021, 12:55 p.m. Sri Lanka time, and it is my last day here in this resort. It's been a very, very amazing time, and I am going to pack my bags and start my travel again tomorrow. So I'll update you all. Just follow me on my Instagram, check my stories out. You'll see where my next destination is going to be. Um, Getting into my travels, I want to wrap up my week as well. It's currently Friday. And so, what I plan on doing is definitely setting up some trades, getting ready for the weekend. Um, I'm going to be in and out of trades within the day. So, whatever moves I make in this video is going to be based on intraday and not just on intra-week. So, my targets, I'm going to explain some weekly targets where I plan on possibly having price go in the next week, and then I'll also explain a daily target where I suspect price to go by the end of the day. And so right now we're going to go over Eurgbp, and I also want to touch base on Usdchf, and then also get into Gbpjpy, in which I just placed a long order about an hour ago. And we're going to discuss all of these pairs right now, wrap up the breakdown for the week, and I'll get back to you guys Sunday or Monday of next week. So where we left off in the last video, I went and I had broken down Eurgbp shorts, and I had some positions. So I just closed out of my fourth win for Eurgbp of this past week, and pretty much I had two shorts at the break. So I had a short a few days ago. It was the 7th yesterday, the 6th. So about on the 5th, let me actually go to the macro time frame and I'll explain exactly where I had some shorts. So I had some shorts from the 1st of October, around the 1st, between the 1st and the 3rd. The 3rd, here we go. This is the start of the week. So I had some shorts in at the 3rd of October, and I exclaimed that price is going to continue its decline because it's on a bear trend. I only took the price down to last month's lows, and I said that if last month's lows were to be broken, there was going to be further strength to the downside, and the lowest it'll get before a bias change to a full bear market would be around 0.85, where my marker is at right now. So price went and closed successfully below 0.85, and as you guys can see, it is now continuing on its bear trend. So that's what we all see right now at the moment, and the succession from this is we're going to project this to go towards weekly lows and perhaps break it by the end of the day. The low is only 23 pips away. So to me, that's plenty of space, but it's not enough pips to collect for a successful trade. So I'm not looking for a 23 pip target. Instead, if I'm going to take any type of risk in this trade, I'm looking for a potential target of more than 23 pips. So as you guys can see, that TP is not the same. I mean, actually, yes, that's the TP, 23 pips. So that's just to show you guys where price is going to go if we get some sort of pullback into a range-bound market. For right now, I do suspect price to continue going down further past that 23 pips, and I would personally go for at least 70 pips today, just towards last year's lows. So that's where I personally am going to aim for my trade to close. Hopefully it can do that today. It can do that at the end of the day, the end of the next week, but that right there is basically my weekly target. As of right now, it's kind of hard to say because we do know a few factors, but we don't know the magnitude of this next move. So in case the US session is volatile, I'll allow it to continue to go down. But my moves for the day in general, my bias for the day is towards the downside. So either way, I'll have that target placed. Now let's discuss where will I place my entry getting ready for the London session, because it's 1 o'clock p.m. here. So in London, it's officially 8:30 a.m. So it's a crossover between Asia and London. And what we can suspect now is some major volatile moves making up the direction of the day. So what I see right now is yesterday's downtrend is currently being tested, the highs of the downturn at least. So price has been accumulating upwards the entire Asian session. As we can see, close of US, Asia highs kept on going higher and higher and higher. And for the past 13 pips, it created a 13 pip range from Asia low to Asia highs. This is why I don't trade Asia, because the range is very tight and it's not really the real move. It's just setting up for the move. It's accumulating orders. So what Asia tends to do is it tends to either manipulate the market towards the opposite side before whipping out and knocking out either lows or highs and continuing with the trend, or it will lead London into some sort of breakout to the upside, invalidating any shorts for the day. So right now, you guys can see where my hard stop is for that particular trade. It's about 42 pips away. I'm going to set up an entry in this video based on what I already know based upon price action. So as we can see, when I did explain yesterday's movement, we can see price already went on A to B, B to C, C to D wave, okay? And then there was another minor wave within that wave. So retail stops are right above at 0.85020 in that area. That's a retail stop zone, and it's about 8 pips away. A professional stop will be slightly above, where you guys can see that there is a pivot break. That's where my stop loss is placed for the new order in case new lows are broken. Now, let's get into today's thesis. So price has been climbing up. You have an A to B, B to C, C to D wave. C was weak, it got tested. If this C gets broken again, we can confirm a downtrend. So what I'm going to do now is I'm going to put a sell stop slightly below that level. So right at the low of the day, that's where we're going to have our entry. Where's the stop loss going to be? If you base it off of this A, B, C, D, I want it to be above this retail stop zone. And for basing this off of anything else today, there has not been a succession towards the downside, so I cannot count waves just yet. But if this is the peak, this will be the high of the day, and we should not see price move back to the upside. If we do see price move back towards the upside at the succession of the break of that low, that's going to indicate indecision in the market, either a range bound for the day or just a complete waste of time, and the market might be going into a consolidation for the next week or two. At that point, I'm not interested in taking trades. I'm not a counter trend trader. I do trade with the trend for various reasons. So that's my markup for Euro GBP. Let me just place my stop loss with this new order. And based off of the 15-minute, I already have my thesis for the 5-minute, and I said slightly above this high. That's retail stops. So if I were to take that trade, that is going to be my stop loss. So total, I'm looking at 30 pips worth of stop. Now, that's a little too far, like I said. So I like to tighten my stops. That would be a daily stop, weekly stop. For me personally, I like to get a little bit more into the technicals. And like I said, there is a retail stop zone, but then there's that stop. So unfortunately, that would literally be where my stop loss is placed. So let me just place that stop right there and go on to the next pair. This is going to be a little bit longer of a video because I'm breaking down all of this with you guys. So bear with me. The wrong order. All right. And I'm going to modify that. Stick with my daily hard stop, because what's going to happen is this order is going to get triggered, and then this order is going to get triggered. And at that point, I have both orders triggered, and the market's running at that point. So regardless of whatever happens, just a moment, got a phone call. Okay, so I'm back. So pretty much, sum it up, that's my hard stop for the day. There's no real down wave for me to really place an order just yet. And if I do place an order, it's basically going to be based off of limit order properties. So hypothetically speaking, if I did have a limit order right above where this false resistance zone is, could be a real resistance, but just don't have the stops up there. That's retail zone. Hard stops are slightly above where it's validated. And this is where I will be taking the drive. So if it was based off of a limit order based trade setup, this would probably be where I put the trade. So for me personally, because I'm already familiar with everything and the way the market's set up, that's about 20 pips away. Limit order wise, if I do suspect price to continue downwards for the day, it doesn't hurt for me to enter a sell right here. But based on my own principles, I like to wait, because not only is it more disciplined, see the 0.618 is right above, not only is it more disciplined, but it eliminates the fear factor. So if it keeps on going up, I'm literally just not even in the trade. And if it does go down, it just gives me a little bit more security rather than entering a wild trade right now, although I do foresee price holding in this area and going down. So let's just wait for the remainder of the London session and continue tracking that pair. I have my orders already placed, and I just want to make sure I have my profit target set for this sell stop as well. So let me just do that, and then we'll move on to the next pair. All right, so that's all set up. Let's go on to Usdchf. I just wanted to briefly break this down. Now, I do not believe that, let's see how good I'm doing on timing. Okay, perfect. I don't believe that Usdchf is going to go down today nor the rest of this week. My reason is because I got stopped out in Usdchf yesterday. It was in a down market, as we can see. Price did break into a new downtrend. We have the ABC succession break of the lows. This is the clear signal giving us indication it should have continued down. Price went up 23 pips from the low of the day, 25 plus pips from the low of the day, and it knocked out the stops of those retail sellers and also my stop, which was slightly above. So that indicated to me that price was going to possibly continue on up. This is a weak resistance, which is why I didn't have a stop above pair, because it was already weak. So price is more likely going to continue above this resistance. We can already see this was already weak area of resistance. So if price failed once, it's going to basically continue on its way back up to at least retest the lows of that resistance. And I don't know. Hold on just a minute. I think my MetaTrader is actually frozen right now, which is not okay, because it did not reload my server. Hold on just a moment. My broker's having some issues. Well, until my broker does load up the new bars, price is actually currently up here at 0.93015. Let me do something real quick. Try to refresh the candlesticks. There we go. So, like I was saying, it's weak resistance. Price went up and tested it once and it rejected once. So if it's going back up towards that resistance again with power and drive, and like I said, there was actually a real signal down below, and that signal did get invalidated recently, giving momentum towards the bulls, and it has been continuing its upside move ever since. This high is more than likely going to get wiped out. Price is more than likely going to go up and retest last month's highs before potentially falling back down. So this is what happens when you're in range-bound markets. I say USDCHF overall is bearish, but at the moment, for the past couple months at least, it's been in a range-bound market, meaning that it's price is currently going against its overall bias. If it's doing that, it's in a range-bound market. In that case, we gotta wait for something to set up towards the highs of that range in that market, and then take it down. If we look at the daily chart, we can see the range-bound market kind of started. It's a big range-bound market too. It started a few months ago, back in July, maybe even sooner, June it looks like. Let me go out as far as I can to see where the range-bound market started. So it started February. So this whole year, USDCHF has actually been in a range. You see, December of last year, the market suddenly stopped. And earlier on in the year, if you were a macro term trader, you could have got the indication that the pair was going to be in a range-bound market for the rest of the year back in February. So way back in February, there was institutional stops right above there. So if you're an institution managing big money, you're out early because you don't want to risk that much pips. It's too much pips, and it's in an obvious place. So at that moment, we now have to break these lows in order to continue the bear market. So as of right now, the USDCHF is not going to be in any type of trending market unfortunately, until 530 plus pips below is broken. So we're going to have to see a very bearish month to continue, or a bearish quarter in order to continue the bias towards the downside. Until then, we can continue to look for bear trades, but only when the setup presents itself. If you look back a few weeks ago, you can see that resistance was recently broken from May resistance, indicating price's next target before you could look for a short is going to be around 0.943, which is about 125 pips above. So in order to save myself time and potential loss, I have to wait the next 100 plus pips for a reaction above that resistance zone in order to give me a valid signal to take it back down towards the downside. At that point, I do foresee, let's get back out there to the weekly, if price can succeed and form some sort of reversal above here, my first area of support, which is the most recent resistance, is going to be at around here at 0.92968. That will be my first area of profit taking after that move is successfully completed. And from there, I will follow up with the market. So you guys can see I have an entire picture of where the market's going on a macro basis and also a micro basis. This stuff comes easy after repetition and over time. It takes a very long time to put it together, but when you do, you'll be able to read the market and then be in and out of markets like I am. Losses do occur, but just know that it's not a bad thing when a loss occurs. It just means that the market is doing something different than what you expected it to do. So depending on your bias and your reason for your loss, it could make or break your week. Let's get into the final pair, Gbpjpy, in which I did say that I was going to end the video with. Just want to see how I'm doing on timing. 17 minutes. Let's try to wrap this up. So in Gbpjpy, we go out to the macro scale. I'm going to just break down where I stopped myself out at earlier on the week and why I am now back in longs. Earlier in the week, I stopped myself out a few days ago around the 5th or 6th of October. So we look at October 6th, we see that price actually went down, and it was on a bull run. So GJ is in a full bull market. So I have the macro lined up with the medium term, lined up with the long term, and it's telling me that GJ is in a very bullish market. So that's something that I don't even have to worry about. We can see that it successfully climbed up and is testing current resistance, which it looks like it's going to break out of that resistance and continue climbing up after this 400 pip rise. GJ is also a very volatile pair, so it is, pretty obvious. We can see, like, if that resistance gets broken, that was 2018 resistance, we will see a large rise in GJ towards the upside for about 1,500 pips. That will be the next point of profit. So I'm actually looking forward to GJ over the course of the next few months, because I do know that if I can get a close above there, that's going to be the pair of the next year or two. That's going to be the talk of 2022 is GJ. You're going to start to see all the gurus, all the signals groups, and everyone eating off of GJ longs for the next several months, because it's going to be an actively trending pair. And if you guys are familiar with price action, doesn't this look like a potential bottom setup? And even if it doesn't continue towards the upside long term, because we can see the 10-year bias of this trend is actually bearish. We can see, looking back all the way from 2002, price is obviously below that. So the 10-year bias is bearish. So what happens when you're looking at the monthly chart and you have such a large range and you have the bias already set? You know the 10-year bias is bearish, but you know that if you try to short it based off a 10-year bias, you might actually be waiting 10 years before your entry or before your target is hit, because look at this pattern. It took 10 years for this pattern to form. Actually, I'm sorry, this is a 20-year bias. What am I talking about? If you look at the 10-year bias, though, you can see that it is actually bullish based off of that 10-year bias. So you could technically base this 10-year bias, and you can have your trend A, B, C, and now is retesting B in order to continue on upwards or the reject. And then you look at the 20-year bias, and you see that there's a whole nother trend. There's, a downtrend, a reversal basically, because you had an uptrend, then you had a downtrend. Now it's showing a full bear market. You have A, B, C, D, A, B, C, currently testing D. It's currently in a range of that down market. So everything I just broke down on the minor time frame, I went all the way out to the monthly 20-year bias. I broke it down for you guys to show exactly how the markets ran. And now let me just go back into the smaller time frame to wrap up my video. So with that being said, and us knowing that it's a bullish bias, price has already broken that resistance and came out of that range, indicating that if price is going to go higher, as long as you have 140 pip stop, where that is the absolute farthest stop I would have, you're going to continue to eat with the trend. But I don't like that stop. It's too wide, so I have mine set 56 pips away. What I did was I waited for the retest of that area, in which we can see a retest of that area late yesterday, late U.S. session, and then the break. Now that trend that broke the retested area is what I'm looking at. So when I look into the 5-minute time frame, which is very advanced, and I don't recommend looking at these time frames unless you're trained enough to do so, we can see that there was highs made yesterday, U.S. highs. Asia respected those U.S. highs this entire day, and we can see basically other highs of yesterday. So let's go back. So we have U.S. highs. I don't have my session indicator on right now, so let me just pop that up. All right, so change the background as well. Just bear with me for a minute. So what we're seeing right now is this is Asian session. That was American session, European, Asia. Asia highs of yesterday became the new support. That was tested in Europe. Europe tested support, broke out into a new range, and confirmed a breakout. That was another leg. Went to America. America consolidated and made a false breakout towards the downside, tagging any bears and stopping out any retail buys. And then it went into Asia, in which Asia tested America lows and confirmed a hike towards the upside. So now, if you're looking at based off price action pattern, we can see that price is currently coming down. It's testing America's highs yesterday because it made a bull breakout. There is retail stops above. You can see there's a congestion area that happened in Asia, so that's technically the retail stops, and it's heading towards America highs to retest that. Since I bought it on market, I'm already saying that if price does bounce off of America highs, it's enough of a bias to continue price towards the upside and break new highs of the day. If it fails and it closes below America resistance, then price is more than likely going to continue to fall for the day. If it does fall for the day, it's going to fall at least 30, 40 pips towards, you can see London support, and then pretty much towards 70 pips towards the bottom. Instead of being a loser and holding a negative drawdown for the day, I'll be out early, and that's pretty much wraps it up for my GJ trade for the week. If trade does continue to break. Like I said, it broke the new highs, and pretty much it'll be on its way towards September highs and possibly ultimately August highs, where I have my take profit placed. Pretty much these are retail stops if you're holding it long term. So that's a pretty easy area to take profit in. And at that point, I'll follow up with you all. So that's my end of the week wrap up. I'll follow up with everyone on Sunday or Monday after this day ends. I'm going to just take a break, enjoy my weekend, and I'll follow up with everyone next week at the start of the market. All right, check it out. Trade safe.